I'm Lisa J. Stocks, and today I'm going to be sharing the performance of a few ETFs that I hold in my portfolio. But before we get into that, let's start with a quick stock market update. Historically, September is the worst performing month of the stock market, but not this time around. Taking a look at VOO and QQM for reference, you can see that the S&P 500 and the Nasdaq have just had their best month when it comes to September's since September of 2010. VOO hit an all-time high today of 615.39 or 615.38 according to this chart. And QQQM hit a high of 248.55. And this happened today. I'm filming this on October 1st when we had a US government shutdown. Records during a shutdown, just as we ended September. What's going on? Let's finish the stock market update and then get on to taking a look at some ETFs in my portfolio. So September is usually rough for the stock market. What makes this year different? As I said, the best that we've seen since 2010. We just had Fed rate cuts, AI stocks, and strong earnings from some big companies also helped to fuel the rally. The Fed lowering interest rates is allowing businesses to have lower borrowing costs and be on track to grow. This is the type of thing that the stock market loves. And now to touch a little bit on this shutdown that's going on. As you can see from these headlines, Congress fails to reach a deal. Congress could not agree on a budget. So there's no funds for non-essential things like parks and museums. About 800,000 federal workers have been furloughed, no pay, but they should receive back pay later down the road. There'll be delays to IRS refunds, food inspections, small business loans, but what they deem to be essential will keep on going, like Social Security, the military, the mail, and TSA. This has happened 21 times since 1977. And so the markets don't panic much when this occurs. The last time this went on was 2018 to 2019, and during that time frame, the stock market dropped by 5%, but it rebounded quickly. And when it comes to the S&P 500, they've hit all-time highs about 29 times this year. So investors are not turned off to the stock market. Everyone must be used to the drama and are prepared to stay invested. Okay, so now we're going to get on to the real topic of the day. And I wanted to share a few ETFs that I'm holding in my taxable accounts. I'm a long-term investor, a buy and hold investor, and I'm still in that building phase when it comes to my portfolios. From time to time, I have to rebalance and get rid of a stock or investment that is not in line with my goals. But like I said, I am in the building phase. I don't sell, take profits. When it comes to a good, solid investment that's growing, paying me consistent dividends in line with my financial goals in every way. The first fund that we're going to take a look at is VOO, and this is the S&P 500 Vanguard ETF. I'll tag a video at the end of this one that gives you other choices as far as exposure to the S&P 500 in ETF and index fund form. But when it comes to VOO, it is a basket of stocks that give you exposure to those 500 largest U.S. companies. It hit an all-time high today. Again, year to date, it's up 14.06%. And over the last year, it's up 17.57%. It is a very popular go-to fund for many. It has a low expense ratio of 0.03%. Which would mean you're paying about $3 in fees for every $10,000 invested. It recently overtook the SPY when it comes to assets, which is a huge win for this Vanguard ETF. And FYI, the SPY has an expense ratio of 0.09%. So something I would never invest into when there are other choices like this. We're at the end of the quarter, so I'll be receiving my dividend soon. And here's a look at my VOO position. I'm currently up 41.68%. I have an average cost of $433.72. And we closed the day at 614.57. Next up, let's take a look at VTI. Now, VTI is the total US stock market. So there is an 88% overlap between these two funds. So you can definitely just pick one. Year to date, VTI is up 13.63%, and over the last year, up 17.37%. So these funds also have a very similar performance. Oh, I said 88, but it's actually 87 according to ETFRC currently. Both of these funds are heavily weighted in technology because those are the companies with the largest market cap when it comes to the US. And the top 5 companies in both of these funds are NVIDIA, Apple, Microsoft, Amazon, and Meta. And here's a look at my VCI position, up 35.39%, average cost $243.21, 32.7 shares, and the current stock price as of the end of day on October 1st, $329.31. This position was built completely $10 at a time. But with all of these funds, I invest by fractional shares, whether it's $5, $10, $20, just being consistent, never letting the stock price hold me back. Now let's move on to crypto. FBTC is the Fidelity Wise Origin Bitcoin Fund. It's an easy way to own crypto. No wallet needed. I hold this in my portfolio over at Fidelity. This ETF holds 1.2 million Bitcoin. And as we saw at the beginning of this year, and it is expected to continue, analysts are predicting that Bitcoin will rally by year end. So when it comes to investing into this fund, Fidelity has custody of the Bitcoin for this fund. Taking a look at the actual Bitcoin, we see on the day it's up 3.8%. Over the last year, up 95.1%, while this fund is up 2.71% on the day, and over the last year, up 89.90%. So I also hold Bitcoin in my portfolio, but wanted to have exposure to it in one of my portfolios at Fidelity. And so this was my choice. And when it comes to this fund, I'm up 25.80% with a quantity of 68.05 and an average cost of 81.48. And the current fund price is 102.51. Next up, let's take a look at SCHD, known as the Dividend Growth King. Year to date, up just 0.77%. And it is down over the last month. Looks like this one had the September that we expected for everything. So when it comes to this ETF, it loves companies that grow dividends. They just raised their payout to 0.26 cents per share. That's a 3.5% jump. It has a dividend yield of about 3.8%, and it's had about 11.5% dividend growth since it started. Top holdings when it comes to this fund are very different than those tech-heavy funds with names like AbbVie, Home Depot, and Chevron. So when it comes to SPHD, I'm only up 6.97%, but like I said, getting those steady dividend payouts, and I currently have 56.63 shares. Last up, I'm holding some shares of SPHD in my portfolio, which is Invesco's S&P 500 High Dividend Low Volatility ETF. Currently $49.72 a share. Year to date, up 2.92%. This fund has 50 holdings. They pick steady S&P 500 stocks that have big payouts. It has a low beta of 0.73, which means it's a lot less shaky than the rest of the market. That beta measures the swings when it comes to the stock market. So for instance, if the S&P 500 was to drop by 10%, this fund might drop by about 7. Another fund that gives a bit of different diversification to my portfolio not heavily weighted in those tech companies. It's a monthly paying dividend company with big names like Pfizer and Altria in the top 10 holdings. And it has a dividend yield of about 3.58%. And I currently have 39.2 shares in my portfolio, and I'm up 18.92%. So investing doesn't have to be overwhelming, especially if you incorporate some ETFs into your portfolio. I know there's one out there that is the right fit for what you are looking for, whether it's broad diversification, dividends, growth, even sectors like healthcare or semiconductors. Do your research. Feel free to drop me any questions or comments, but don't wait to start investing. Remember, time in the market matters more than timing the market. Do some research, find some investment choices that are in line with your goals. The stock market hitting all-time highs during the shutdown, just as we end September, supposedly historically the worst performing month of the year. I'm not letting headlines scare me. I'm not letting all-time highs stop me from continuing on my investing journey. It's okay to start small and then increase your contributions over time. I encourage you, just get started investing what you can keep invested. If you don't have that emergency fund, get that going too, so that your portfolio has the time to build and grow. If you're not already subscribed, hit that notification bell. You can support the channel by joining channel membership and also check out my referral links. I'm going to continue to stay prepared because there are surprises when it comes to the stock market. And if you stay ready, you won't have to get ready when there are opportunities in front of you to build wealth. And as I say, make my money make more money. Thanks for watching. Okay, bye.